Welcome, guys. Welcome. Hi there, fellow traders and investors. Welcome back to the Cosmic Trading Academy and Trading Academy. This is your host, Mr. Cosmic. Today, we're diving into the world of technical analysis, but we're focusing on the Relative Strength Index, commonly known as the RSI. And if you're new to the world of trading, this video is perfect for you. We're going to break down the RSI, how it works, and how you can use it to make better informed trading decisions. Okay, so let's get started. So what is the RSI and why is it important? Well, the RSI is basically is calculated using the formula. Well, basically the RSI is a momentum oscillator. You know, it helps you identify the overbought and oversold conditions in a stock. Okay, show you. This is going to be the RSI. Yeah. Where, basically it's average of days up closes divided by the average of days down closes. That's basically what it is. Okay, let's talk about how to interpret the RSI, and the typical, to understand that it typically ranges from 70 and drops below 30. If it reaches 70s, it's considered overbought. If it reaches 30s, it's considered oversold. Okay, so just remember that every time the RSI reaches 30, it's considered overbought, and every time it reaches 70, every time it reaches 30, it's considered oversold. Every time it reaches 70, it's considered overbought. Okay, now what you got to understand is that the RSI is not a crystal ball. Okay, it's a tool to help you make more informed decisions. It's usually used in conjunction with other indicators in your analysis. Okay, so take for example, if you're working with the RSI of a stock and it's currently at 75. Okay, so let's just take that for example, right? And you see that the RSI is at 75, then it tells us that the stock might be overbought. Might being the operative word here, and it could be a good time to consider taking profits, entering a short position, meaning that you're going to start selling. I don't care if you're in Forex, I don't care what you're in. I don't care if you're in options. If you're using RSI as an indicator, it's the same thing. You're either going to do a buy position or you're going to do a sell position. There's only two options. Okay? So, and if it's at 30, you typically might want to consider getting into a buy position. See, you can see what it's doing. Why? Because 30 shows that it's oversold. 70 considers that it's overbought. So see the range up here of 70? Down here is the 30. So this is why they sold right here and they bought right here. And see how it just is following that. In general, I believe that most of the time that the market is moving that way is because everybody believes that it's going to move that way. So what happens is everybody has this on their chart, and what they do is they move it also moves the underlying asset because of that. Okay, remember that it's essential to analyze the overall context of the market or underlying asset. RSI, it can only be used as an assistant. It's not it's just not your answer for every trade. It's one that you look at in addition to everything else. Okay. All right. Another powerful use of the RSI is its divergence. When the RSI doesn't confirm a stock's, when it doesn't confirm a stock's price movement, it can signal that the trend is about to reverse. Okay, that's the idea. So basically, it can help signal. You see that oversold. It's signaling. Oh, it's oversold. So it's signaling. And see how this is a really great example right here. You see how it reached 50%. This is 50 right here. You see how it reached 50% and traded sideways right there, but really in the overall market it was moving up. and then it moved past it got to 70 right here. Did that stop it? Nope. It kept going. See, a lot of people would have got into a sold position right there and would have been losing all the way up. This would have been a loss. They would have been losing money all the way up. You know why? Because they thought once it reached 70 that it's not going to do anything else. It's going to start selling off now. They would have been wrong. Once it reached 70 here, they would have thought it was going to stop, but it didn't stop. What did it do? Even though on the RSI it was showing ups and downs. Those are averages. But what did it do in the market? It went up. It went up. It took a dip right here. And what did it show? It showed it a little bit right there that it was low. But then it went up. So remember that a RSI is an average indicator. There's no prices on the RSI like it is on the chart. So it's not the same. You see what I'm saying? So you have to understand it's taking an average, not the price. Be careful with that, because that's one of the biggest things that I had to learn about the RSI. It does not include the price. So it's not like it's telling you exactly where it's going to stop at and where to buy it. It's giving you an average of the past. It's giving you an average of the past. That was looking back. You see what I'm saying? And it's telling you, based upon what the past is, what it might do potentially in the future. You cannot have it. It's not an answer. Okay? It doesn't confirm stock's movement. It can signal potential trend reversal. You see what I'm saying? Okay? Now, before we wrap up, I want to give you a few takeaways when it comes down to this. Basically, the RSI is a momentum indicator. Remember that. It helps to identify overbought and oversold conditions. Where does it range? It ranges from the 30s to the 70s. Remember that. It ranges from 30 to 70. So if you put an RSI on your chart, make sure that it says between 30 and 70. If you want to keep it tight and you really want to make sure that it's really past it, one of the tricks that I used to do is put it at 20 and 80. Now that makes you not get into a trade until it's absolute. I'm not going to say it's absolute, but it's much more higher probability. Now, just keep in mind, the chances of it reaching 80 and the chances of it reaching 20 are going to be slimmer. But the probability is going to be higher that it's going to go in your position, okay? In your direction. So just remember that the probability is going to be higher. So if you want to have a higher probability trades, then what you could do is change your RSI and put it at 20 and 80. So that's just one way you can look at it, okay? So let me see here. Again, you got to remember that it's not a guarantee, okay? Another thing, RSI is a tool in combination with other analysis methods of well-rounded decision making. So you got to remember that you got to look at your trade plan, you got to look at the stock's underlying assets, you got to look at how the market is moving, you got to look at any kind of news. You got all of these things play a part. And just remember, the market moves based upon other people having indicators on their charts as well, okay? It's a tool. Pay attention to the divergence of potential trend reversals. Just pay attention to them. It's just a potential for a trend reversal. It's not a guarantee. Okay. All right. And now, that's about what I have, guys. There you have it. That's a beginner guide to the relative strength index. Remember that the price is key. Practice is key. And always consider risk management when you're trading strategies, okay? Always consider, don't get into a big, heavy position. What we say by that is don't put yourself and your account at a big, heavy position and then base it off of a few indicators, okay? So 20 to 30 oversold, 70 overbought. You take a buy here, you take a sell here. That's it. Simple as that, guys. I hope you found this video helpful. Please give it a thumbs up. Subscribe to our channel for more valuable content. Don't forget to hit the notification bell so that you never, ever miss an update. Thanks for tuning in. Have a happy trading day, everyone. I appreciate you.